Hi guys, Harry Otis here, professional trader for 20 years, started my career in 2005 and still alive in 2026. So today is May the 4th be with you day. May the 4th. And the main theme today that I see is hostilities and divergences. Okay, we'll get to that shortly, but first we always talk about the technical picture. This is a chart of the S&P 500. Today is Monday the 4th. Of course, mentioned it before, 2 seconds ago. Okay, so what I want to tell you guys is that we are still bullish. Okay, we might start to drop a bit. Okay, because the technical picture here is bullish. There's no denying it. But if you bring in the moving averages, you see that we're still holding above this short term, which is bullish, and you want to stay that way. But we are very stretched from the 50. Okay, this is a very unusual situation. It just shows the strength of the breakout. But when you're that stretched, you might have to get a pullback, maybe touch the 20 here. Okay, this one in pink is the 20. So it doesn't have to play out that way. It could just like go sideways and these things can come back and meet it around here. But it's starting to get a little bit stretched, and I took some short positions again up here. But I did it in a way where I can't lose my, like if the market still goes up, I still get paid a credit. I did it with options. So I'm just bullish technically, but but it looks like to be a little bit stretched. Okay, we might get some kind of pullback going forward. I still expect one. Okay, if we don't, this is uber bullish. Okay, so technical picture is bullish. We always pair the technicals with the sentiment. We're at greed 63. Same thing, sub indices, whatever. Put call ratio still at fear. Okay, and yet we still have neutral market volatility. It's not down to nothing. Okay, like if you look at the VIX is pretty, it's 18. That's pretty high. It's not down to the, below 15 where I would get worried. So it's still good. It's still good if you do options trades, and still selling premium is fairly good if you do it wisely. But yeah, it's just telling you that we are still in still elevated levels of fear, I would say, even though we are greedy. I just don't think that the greed here has been solidified as we saw with the previous reports of the AAII investor sentiment. We just barely started getting bullish, and people started getting scared again at the top with no shortage of bad news. So technicals bullish, sentiment is still supportive. So expecting a pullback might not happen. Okay, so let's get to the main event: hostilities and divergences. What do I mean by that? Well, the hostilities, we know that the big market news today is that Iran attacks the UAE, and US says it sank some boats in the Straits of Hormuz. Okay, it's just like the war continues, blah blah blah. The market seems to not even care. It's barely down. Okay, but if you look at oil, US oil, okay, it's still hovering in this chop zone type area. Okay, it's not bullish, not bearish, just hovering. Okay, but that's US oil. But if you look at the USO, which is with the tradable index, okay, it's at highs. It's near highs. Okay, and this is what I mean by the hostilities and the divergences. Here is a question, an example of the divergences. We have USO going up, but we have a series of negative divergences here. As the price is going up, the RSI is going down, as is the MACD. We have a new high, okay, and a new low on the RSI and MACD. So this is like negative divergence. Okay, we have negative divergence. It's very, very bearish in terms of the technicals. So it might play out. It might even go down. Doesn't mean it has to go all the way down. It could just go down a bit to alleviate this before going up higher. But so far, this oil thing, I'm expecting it to go down. You guys know the story, but I don't make trades off US, so I look at US oil because it's more akin to what we are expecting to see going forward, because USO, this trades like 24/7, let's say, pretty much. It trades everywhere, whereas the USO just trades when the market is open here. Okay, so here you get a better picture. So I just think that oil is basically stuck around the 100 level. If you look, the average of all this chop zone is like 100, okay, which seems to be a fairly decent price for what is going on in the world today. Okay, if the Straits of Hormuz are closed and the price is 100, that's pretty decent. Okay, so divergence number one, the hostilities is the war. Divergence number one is the U.S. oil. I mean, you even see it here on the first part, not on the second, because here it's still down. Okay, you see it on USO, but not on US oil specifically. Okay, so that's it for the hostilities. Now, I want to talk to you guys about some sectors here, or just one sector that I think might be bottoming out and is worth trading. Okay, and I think it's the software as a service company, the SaaS companies. Remember we talked how bad they were before? Okay, let's look at ServiceNow, one of the big ones. Okay, we talked how bad it was before. Okay, yes, it is a bear market. ServiceNow went from 230 down to 91, destruction. Okay, but look, you had some bad news coming out in the earnings. They barely broke even. They met expectations. Okay, even though it was higher. They made 97 cents. They were expecting 97, even though, they made money. The software sector is still getting hit. However, look at it right now. Okay. We had bad earnings and it's still holding. Okay. So, divergence is number 2. What do I mean? Again, look, we're getting lower on the chart here. If you can see it, the price has gone lower. Okay. And yet the RSI is going up. Same with the MACD. The price has gone from here lower since February, and yet the MACD and the RSI are higher. This is positive divergence, okay? We see it in ServiceNow, and it is worth doing a trade on it right now, okay? If you guys want to play it, I would suggest a call spread financed by some puts, okay? Not just ServiceNow, but, the other big one, Salesforce. Same thing, same story. If you look at Salesforce here, look, the price here is going down, RSI up, positive divergence. The sector as a whole is maybe washed out. So it's worth a trade in my opinion, okay? And one of the big boys here that I like, Shopify, didn't go down as much as the others. This is not like a divergence play. It's just consolidating here before breaking out, okay? If it breaks out above these levels, okay, which is the gap, let's mark it for you guys so you can see it clear. Okay, if it covers this gap area right here, this gap area, breaks above that, bullish. We're going back to 160, 150, 165 to 170-ish, back to the highs. There's no other resistance point. You can even target this gap right here, which is at 155. So let's say 155 to 170 is the target if it breaks up above 135. I like Shopify the best. It seems to be holding up stronger than the rest. Okay, so Shopify, Salesforce is another good one, and ServiceNow are my picks for the SaaS sector rebound. Okay, so that's it, guys. Okay, you have May the 4th be with you. We have hostilities still going on in the Gulf, and we see a series of negative divergences in USO. Here, price up, stochastics down, and we have a series of positive divergences in the SaaS sector. Salesforce up, price down, okay? And same with ServiceNow, price down, RSI, MACD up, okay? So that's it. May starting relatively well for the bulls. We'll see how it goes. Everybody's still very, very scared, okay? We still have some fear in there despite what we see in the fear and greed index of greed. I still see a lot of negative headlines. Okay, so we're certainly not at a euphoric level in the market, and we can certainly go much higher from here. We don't have to go down now. We can go much higher before going down. Okay, so that's it, guys. I'll see you guys later on this week, and really, really curious to see how these divergences play out in the future. All right, later.